Welcome back to Investing Talk Podcast.
It is great to be back. And today we're not just looking at a mining stock. We are looking at a company that is making a massive, a really calculated play to break China's chokehold on the global supply chain. We are talking about Energy Fuels, ticker UUU.
Energy Fuels.
Right.
This is a name that's been, floating around for a while, but it's usually just filed under uranium play.
Mm-hmm.
But looking at the research you've brought today, it feels like something fundamental has shifted.
It absolutely has. I mean, this isn't just about pulling rocks out of the ground anymore. That's the old thesis. They have just made a massive move, a huge acquisition of Australian Strategic Materials, or ASM, for roughly, $299 to $300 million?
Wow.
This changes the entire thesis from a resource play where you are just selling dirt to a full-blown infrastructure play.
$300 million is not pocket change, even for a company this size. And just to orient everyone listening, today's Monday, January 26, 2026. If you pull up the charts, the company is sitting at a 3-month high. The market is clearly reacting to something.
Oh, for sure.
And the volume suggests it's not just retail traders getting excited.
Exactly. The market is waking up to the fact that Energy Fuels is positioning itself as this critical piece of the puzzle for everything from electric vehicles to national defense. They're trying to become the Western alternative.
Okay, so we're going to unpack all of that. The money, the strategy, this mine-to-metal concept you mentioned, and of course the risks.
Yep.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us get this data out to more people.
So let's get into it.
Let's shift to the hard numbers first. I always get a little skeptical when I hear phrases like energy independence and critical minerals.
Yeah.
It's easy to get swept up in the narrative.
Of course.
But do the financials actually back up the hype? Is there a real business here, or is this just a story stock?
The financials are actually the bedrock here, which is pretty rare for a growth story like this. But to understand the money, you have to look at the uranium side of the business first. That is the engine room.
Right, because before they were a rare earth story, they were a uranium story.
They still are, and that uranium business is performing exceptionally well. I mean, if we look at the momentum from Q3 of 2025, it was incredibly strong.
Mm-hmm.
And now, looking at the guidance for Q1 2026, they are forecasting production of 430,000 to 730,000 pounds of U3O8.
Okay, just a pause there for you listening if you're new to the sector. Is that a significant amount of yellow cake?
It is significant. But the more important number is the sales volume. If you zoom out to the full sales picture for 2025, they expected total sales to land between 780,000 and 880,000 pounds. And they actually beat their previous guidance on that.
So they're actually selling, this isn't just hope.
They are moving product, yeah. They are selling into a market that is hungry for uranium.
Okay, but here is where I get a little stuck. If we are here to talk about rare earth elements, the stuff that goes into magnets and high tech, why are we spending time on uranium? Why does the uranium output matter to the rare earth thesis?
This is the critical insight. It's what we call the cash engine concept. In the mining world, usually when a company wants to expand or, build a new factory, what do?
They issue new shares. Dilute everybody.
They dilute you, the shareholder.
Right.
They slice the pizza into smaller pieces to pay for the oven. It's the classic mining trap.
And investors hate that.
Exactly. But Energy Fuels is different. The uranium side of the business is generating that free cash flow. That cash is what funds the expansion into rare earth elements, or REs.
I see. So instead of going to the bank or printing more shares, they are using their own profits.
Precisely. It allows them to fund the rare earth expansion without that painful dilution that kills so many growth stocks in this sector. They have a strong balance sheet, very low debt, and cash coming in from 2 licensed uranium facilities. They're essentially using the old economy nuclear fuel to build the new economy.
Okay, let's talk about that expansion then, the growth engine. We keep seeing the White Mesa Mill in the notes. Why is this specific facility so important?
The White Mesa Mill in Utah is the crown jewel. In terms of U.S. strategic assets, it is arguably one of the most valuable pieces of real estate on the map. They have just completed the Phase 1 capacity upgrades.
Right.
We're talking about an upgrade that allows them to process 850 to 1,000 metric tons annually.
And that is already up and running.
That is Phase 1. But here's where it gets really interesting, Phase 2. We just got the bankable feasibility study, the BFS, this month, January 2026. This is the blueprint for the big leap.
A bankable feasibility study is basically the document you take to a bank to prove the project makes money.
That's
Right?
it.
What kind of numbers are in there?
Big ones. They are looking at a capital expenditure, or CapEx, of $410 million. That's the cost to build it out. But that investment is projected to ramp up output to 6,000 tons per annum of NdPr oxide.
Okay, stop there. NdPr. We see this acronym everywhere in this sector. Break this down.
Yep.
What is NdPr and why is everyone chasing it?
So NdPr stands for neodymium-praseodymium. Think of them as the like the salt and pepper of the high-tech world. When you mix them into magnets, they create arguably the strongest permanent magnets commercially available.
And who needs magnets that strong?
Anything that needs a highly efficient motor, the drivetrain of an electric vehicle, wind turbines. But also, and this is crucial for the government contracts advanced defense systems.
So we're talking missiles, drones, fighter jets.
Exactly. But it's not just NdPr. In this study, they are also targeting 66 tons per annum of terbium and 240 tons per annum of dysprosium.
Dysprosium. That sounds like something from a sci-fi movie. Why does the average listener need to care about dysprosium?
It does sound sci-fi, but it's absolutely vital. Dysprosium is the element you add to a magnet if you want it to work in high heat.
Okay.
If you're building a fighter jet engine or a missile guidance system, things get incredibly hot. Standard magnets fail at those temperatures. Dysprosium magnets don't.
So by securing this production, they're essentially locking themselves into the supply chains of the biggest growth industries on the planet, EVs and defense.
Correct. And defense departments in the West are desperate to secure a supply that doesn't come from China. They cannot have their supply chain cut off in a geopolitical crisis.
That leads me to the competition. If this is such a gold mine or a dysprosium mine, I guess what is stopping a competitor from stepping in? Why can't a giant like Glencore or Rio Tinto just buy a plot of land next door and eat their lunch?
That is the right question. The answer lies in the mine-to-metal moat.
Define that for us.
It means owning every step of the process. You mine the ore, you process it, and you turn it into the separated metal oxides. The White Mesa Mill is currently the only facility in the United States that can process monazite sands to produce these high-purity rare earth oxides.
The only one in the entire country.
The only one. And the reason is regulation. Monazite sands are radioactive. They contain thorium and uranium. To process them, you need a radioactive materials license.
And getting one of those isn't like getting a driver's license.
Not at all. Permitting a new mill to handle radioactive waste in the U.S. takes years, sometimes decades. It is a regulatory nightmare. Energy Fuels already has the license. That is a massive barrier to entry.
Right.
It creates a vertical supply chain completely independent of China.
And this is where that acquisition comes in, right? The ASM deal.
Yes. Buying Australian Strategic Materials connects the White Mesa Mill in Utah with the Dubbo project in Australia and a metals plant in Korea. It secures the metal part of mine-to-metal. They aren't just selling a powder anymore. They are moving towards selling the actual metal alloys needed by manufacturers.
So they are building a fortress around their business model. Let's pivot to the charts and price action. Because while the fundamental story sounds great, we need to see if the market actually agrees with you.
The market is definitely agreeing right now.
I'm looking at the data here. The stock surged over 7% recently, hitting a 3-month high. And if you look at the month of January as a whole, we are seeing gains of around 62%. That is a massive move in less than 4 weeks.
It is a breakout. A 62% move in a month for a mining stock is incredibly aggressive. And what's compelling is that it is driven by news, not just speculation.
I'm also seeing a massive spike in volume right after the ASM acquisition news dropped.
Volume is truth in the stock market. When you see a price surge accompanied by a volume surge, it tells you that institutions are getting involved. This isn't just mom-and-pop retail investors.
Right.
This indicates heavy buying interest and, importantly, reduced selling pressure. People aren't looking to exit, they are looking to get in.
So the psychological state of the market right now is signaling a bullish continuation.
That is the read. The deal acted as a catalyst. It pushed the price up to test new resistance levels, and it broke through. The market is re-rating the company based on this new reality.
It's not just a mining company anymore, it's a strategic asset.
Exactly. And the charts reflect that realization.
Let's move the discussion to what the market is feeling using the sentiment bridge. We have the price action, but what is the broader vibe in the market? What are the algorithms and the analysts saying?
If we look at the quantitative scoring, it is incredibly positive. We track the relevance and sentiment of news items hitting the wire. For energy fuels, all of the 10 recent news items scored a perfect relevant score of 1 point.
Meaning the news is directly about them, not just noise.
Right. And the sentiment scores for those items range from roughly 0.41 to 0.82. For context, anything above 0.15 is considered bullish in our model.
Oh, they're way above the threshold.
Way above. If you take a weighted average of the sentiment from late January, specifically around January 23rd and 24th, it averages out to about 0.55. That falls into the strongly bullish category.
And the driver for this sentiment is obviously the acquisition.
It is the narrative driver, yes. The market loves the ASM acquisition because it solves a problem. It creates the largest non-Chinese rare earth producer in the world. Investors look at that and see safety and growth.
When does that deal actually close?
It is expected to close in June 2026.
And what about the guys in suits? What are the analysts doing?
Analysts are maintaining their buy ratings. They aren't downgrading on the news, they are validating it. And looking at the institutional flow, the 13F trends showing what the big funds are buying, we are seeing a trend of accumulation in uranium and REE plays.
The smart money is positioning itself.
Precisely. The surge in the stock price implies what we call cluster buying. It's not just one fund, it's a group of them moving in tandem.
Okay, I have to step in to cool the hype here. We have to look at the risks. What could go wrong? Because a 62% gain in a month usually invites some volatility.
You are absolutely right to ask that. There is no such thing as a risk-free trade.
Let's talk about risk number one, deal execution. The ASM deal isn't closed yet.
That is true. It is announced, but not closed. It still faces regulatory hurdles and shareholder votes, which will drag on until June 2026. Deals can fall apart.
And if it falls apart, that premium evaporates.
It could cause a pullback, certainly. However, I would argue that the market seems to have priced this risk in, and the vertical integration offers such premium pricing power that it mitigates fundamental weaknesses. I mean, even without the deal, they have the mill, but the deal is the accelerator.
What about risk number two? Commodity volatility. At the end of the day, they are still at the mercy of commodity prices. If uranium or NdPr crashes, their revenue crashes.
That is the nature of the beast, and we cannot ignore the China factor. China still dominates 70% of mining and 90% of processing.
Right. If China decided to flood the market to drive prices down and bankrupt Western competitors, they could try. It's a predatory pricing strategy.
It is, but here is the counterargument. The U.S.-only moat is the hedge. Western governments are increasingly willing to pay a premium for security. They don't want to rely on China. So even if the global price dips, Energy Fuels has a protected market within the U.S. and allied nations.
Plus, they have some diversification coming online, right?
Yes, they have the Donald Project coming in 2027, so they aren't putting all their eggs in one basket. They are spreading the risk across different assets and different timelines.
Let's wrap this up with the final verdict. We've looked at the fundamentals, the technicals, the sentiment, and the risks. Where do you land on Energy Fuels?
Taking everything into account, I am awarding this a bullish score of 9 out of 10.
A 9 out of 10, that is a very high conviction score.
It is, and here is the investment thesis. Energy Fuels is becoming the premier Western rare earth champion.
It's that integration.
It is. Integrating White Mesa's low-cost NdPr, remember, we are talking 6,000 plus tons per annum with downstream metals for EV and defense security. That is unique. And the financial backing. Uranium sales of nearly 900,000 pounds are funding the growth.
So what is the time frame for the listener? Is this a quick flip?
No, this is not a day trade. This is a multi-year hold. You want to be holding this through the closing of the deal in June and targeting the Phase 2 commissioning in 2028. That is when the real value unlocks.
That's the score. If you want more deep analysis like this, make sure to subscribe, like, and comment below. We'll see you in the next one.